Ever felt like you thought you had a handle on something complex, maybe a project, and then just one tiny detail, something misplaced, throws everything off?
Oh, absolutely. It's that frustrating feeling of the ground shifting under you.
Exactly. Well, imagine that with financial records. Every single dollar needs a correct place. So today, we're doing a deep dive into something really crucial in bookkeeping: understanding suspense accounts and how to fix those tricky errors that can sometimes hide.
That's a great analogy. And our mission here is really to unpack the key bits from our source, suspense accounts and errorcorrection.pdf. We want to help you understand how these tools work, what errors they actually catch.
And maybe more importantly, what they don't catch.
Precisely. And why getting this right is so vital for accurate financials. It's about turning that potential chaos into, well, clarity.
Okay, let's jump in. Suspense account. It sounds a bit, I don't know, mysterious, like a financial black hole. What exactly is it?
Yeah, it does sound a bit dramatic. But it's really more like a temporary holding bay. Think of it as a financial waiting room.
A waiting room.
Okay. Yeah, when a bookkeeper makes an entry but isn't quite sure where the final destination is, or if something just isn't balancing right, they can temporarily park that amount in the suspense account.
So the key word is temporary.
Absolutely temporary. It's just a pass-through point until the correct account is figured out.
Okay, so how does this holding bay get created? Does the system just flag it?
It can sometimes. An older system, or maybe a manual journal that's forced in unbalanced, a computer might create a suspense entry to make the debits and credits equal.
Right.
But honestly, more often, especially with modern systems, the bookkeeper purposefully puts an amount there.
They choose to use it.
Yes. They'll make a manual journal entry and decide, okay, I need to debit or credit suspense here because they know something's off or they're waiting for info. It's an active choice.
Got it. It's a way of saying, hold this, I need to investigate.
Exactly.
Now, this is interesting. You mentioned not all errors are equal. And because of that, not every error actually affects the balancing act, the debits equaling credits.
Correct.
So it follows that not every single mistake is going to result in a suspense account entry, right?
You've hit a crucial point. Many people assume any error means suspense, but that's not true. There are specific types of errors that, surprisingly, don't create an imbalance.
Okay, let's hear about these sneaky ones.
Right. There are 5 main types. They wouldn't trigger a suspense account because, on the surface, your debits still equal your credits. Your trial balance looks okay.
Tricky.
Very. First up, complete omission. Simple enough, a transaction just never gets recorded at all. Say you forget the bank charges for the month. No entry, no imbalance.
Makes sense. Nothing to balance if nothing's there.
Second, error of principle. Here, you post to the correct side, debit or credit, but the wrong type of account. You break a basic accounting rule.
Example.
Okay, say you pay for machinery repairs, that's an expense. But you accidentally debit the machinery cost account, that's an asset. You debited something, credited cash, so it balances. But fundamentally, it's classified wrong.
Expense versus asset. Big difference.
Huge difference. Third, error of commission. Similar, but here, the class of account is right, just the specific account is wrong.
How's that different?
Well, say you pay for the electricity bill, an expense, but you accidentally debit the telephone expense account instead.
Right.
Both are expenses, right? So the overall expense category might look okay-ish, and it balances, but the detail is wrong.
Got it. Wrong bucket, but the right shelf, sort of.
Good way to put it. Fourth, reversal of entries. The amount is right, the accounts are right, but you debit what you should credit and credit what you should debit.
Flipped it completely.
Completely flipped. Imagine you process a purchase invoice like it's a credit note. Instead of Dr. Purchases, CR Payables, you do Dr. Payables, CR Purchases. It balances, but it's backwards.
Ouch. That could mess things up.
Definitely. And finally, fifth, the error of original entry, but specifically a transposition where you use the same wrong figure for both debit and credit.
So like typing 1,000 instead of 100?
Exactly. You pay $100 for stationery, but you record Dr. Stationery $1,000, CR Cash $1,000. You used the wrong number, but you used it consistently on both sides. So it balances.
Wow. Okay, so those 5 slip under the suspense account radar because they don't break the fundamental debit-credit balance.
Precisely. They require different detection methods.
All right, so now let's get to the ones that do cause trouble. These are the errors that will lead to that suspense account being used, right?
Yes, these are the ones that throw the books out of whack and signal something needs temporary holding. And remember, in most computer systems, the bookkeeper is usually choosing to use suspense to handle the imbalance.
Okay, what are they?
3 main culprits here. First, another type of error of original entry, but this time a transposition using different figures for the debit and credit.
Ah, so the numbers don't match this time.
Exactly. Maybe you pay $32 cash for repairs, so you credit cash $32 on. But the receipt only says $23, so you debit repairs $23. Now you're short $9 on the debit side.
And that $9
goes into suspense. Doctor repairs $23, doctor suspense $9, CR cash $32. It balances the entry while flagging that $9 discrepancy for investigation.
Okay, that makes sense. What's next?
Second, an error of posting to the same side of the double entry. This often happens if someone's a bit shaky on their debits and credits.
Like trying to debit two things without a credit?
You got it. Or credit two things without a debit. Imagine thinking a $50 electricity accrual needs a debit to both the accruals account and the electricity expense account. That's $100 in debits.
No credit. Oops.
Right. So to make the system accept the entry, they might be forced to credit suspense for $100, just to make it balance temporarily. Then they have to figure out the correct posting.
Okay, a fundamental double entry mistake. And the third?
Third is an error of omission to one side of the double entry. Here, the bookkeeper knows one side, but is completely unsure about the other.
So they just leave it blank.
Well, they can't leave the blank if they want it to balance. So they post the side they know and post the balancing amount to suspense. Classic example, unidentified cash in the bank.
Ah, money appears, but you don't know from where.
Exactly. Bank went up, say, $300, so Dr. Bank $300. But where did it come from? You don't know yet. So sack suspense $300.
And again, the suspense account holds it until you solve the mystery.
Precisely. And just to reiterate, in modern systems, this use of suspense is almost always a deliberate action by the bookkeeper dealing with uncertainty or an obvious imbalance they need to park.
Okay, theory is one thing, but seeing it in action really helps. Let's talk about Michelle, small business owner, newish to bookkeeping.
Right, a very common scenario.
She used a suspense account during the year when she got stuck. At year end, she finds a $1,010 credit balance sitting there. Time to play detective.
Absolutely. This is where the rubber meets the road. So Michelle digs in. Remember, she starts with that $1,010 credit needing explanation.
Okay. What's the first error she finds?
Error 1. She found sales returns of $8,980 were accidentally put through as if they were sales.
Oof. So instead of reducing sales and receivables, she increased them.
Exactly. This error, interestingly, didn't actually involve the suspense account initially, but the correction is huge. She basically overstated receivables by double the amount, $17,960.
Why double?
Because she didn't just fail to record the return correctly, which would reduce receivables by $8,980, she also incorrectly recorded it as a sale, which increased receivables by $8,980. The difference between where she is and where she should be is twice the value.
Wow, okay. So the fix is complex, but doesn't touch suspense. Dr. Revenue, Dr. Sales Returns, here are trade receivables for that big $17,960.
Correct. Now, error 2, an IT support payment, $120 paid, covers a year starting Sep 1st. She had originally just put Dr. Suspense $120, a CR Bank $120 because she wasn't sure how to split it.
The classic park it in suspense move.
Next book. So now she needs to fix it. Her year ends Sep 30th. Only 1 month of that $120 belongs in this year's expenses.
So $10 spent, $110 prepaid for next year.
Exactly. The correction is Dr. IT expense is $10, Dr. Prepayments $110, and CR Suspense $120. This credit to Suspense starts clearing that original debit she made.
Okay, suspense is involved here. What next? Error 3.
Error 3. She received a $70 settlement discount on a big purchase, $3,500, but she just credited the $70 discount straight to the suspense account.
Instead of
crediting discounts received, which reduces her costs and increases profit. So the fix is easy. Dr. Suspense $70, CR discounts received $70.
Okay, another suspense entry, this time a debit.
Right. Error 4. This one's a bit tangled. Michelle calculated $580 of insurance was prepaid, but she recorded it weirdly. Dr. Insurance $580, Dr. Prepayments $580, and then CR Suspense $1,160.
Whoa! Why double the credit to suspense?
It seems she thought she needed to debit both accounts, maybe misunderstanding the adjustment. To recognize a prepayment, you normally credit the expense account, insurance, to reduce the current year's charge and debit the asset, prepayments. She debited both, creating an imbalance she plugged with suspense.
So her insurance expense is way overstated.
By $1,160, exactly double the prepayment. The fix is Dr. Suspense $1,160, CR Insurance $1,160. This debit to suspense clears out that big credit she made.
Okay, that's a big adjustment to suspense. Error 5.
Error 5. A contra entry. Michelle owed a supplier $400. That same supplier, acting as a customer, owed Michelle $500. She decided to offset them.
Makes sense. Standard practice.
Right, but she processed a journal to remove the full amounts. Dr. Trade Payables $400, CR Trade Receivables $500, and the $100 difference.
Let me guess. Suspense?
You got it. She put Dr. Suspense $100 to make it balance. But a contra should only be for the lower amount. She should only have offset $400.
Meaning the customer still owes her $100.
Exactly. The correction needed is Dr. Trade Receivables $100, put that amount back on the customer's account, CR Suspense $100 to reverse her incorrect entry.
Okay, a credit to Suspense this time. Almost there.
Last one, error 6. Bank charges for the year, $115, were just missed, completely omitted.
Like your first type of error that doesn't hit Suspense.
Precisely, a complete omission. The fix is simple. Dr. Bank charges $115, CR Bank $150, no impact on the Suspense account.
So let's tally the Suspense account movements from these fixes. We started with $1,010 CR.
Okay, error 2 was Kira Suspense $120. Error 3 was Dr. Suspense $70. Error 4 was Dr. Suspense $11.60. Error 5 was Kira Suspense $100.
Let's see. Credits, $1,010 initial plus $120 E2 plus $100 E5 equals $1,230 credit.
And the debits, $70 E3 plus $1,160 E4 equals $1,230 debit.
They match. $12,230 debit cancels out, $1,230 credit.
Exactly. After processing all those corrections, Michelle's Suspense account balance is nil. 0. Puzzle solved.
That's brilliant. Seeing it step by step with Michelle makes it so much clearer. So pulling back from her specific situation, what are the absolute key takeaways, the things you really need to remember when tackling these accounting puzzles?
Okay, 3 big ones stand out for me. First, always ask, does this correction even involve the Suspense account? It totally depends on the type of error. Remember those first 5 we talked about, omission, principal, etc. They don't touch Suspense. Understanding the error type is job 1.
Right. Don't just assume Suspense is needed.
Exactly. Second, if Suspense is involved, how do you know whether to debit or credit it? The best way is that should versus was comparison.
What should have happened versus what actually happened.
Perfect. Look at Michelle's error 5, the contra. What was done? Dr. Payables $400. Dr. Suspense $100. CR Receivables $500. What should have been done? Just Dr. Payables $400, CR Receivables $400. Comparing those tells you the adjustment needed. Dr. Receivables $100. CR Suspense $100. It makes the debit credit clear.
Okay. The comparison dictates the correction. Makes sense.
Okay.
And the third insight.
Watch out for the double the amount trap. We saw this with Michelle's first error, the sales returns treated as sales. Because one transaction was wrong and the correct opposing transaction was missed, the fix required adjusting by twice the original amount.
Because you have to undo the wrong one and put in the right one.
Precisely. It's easy to just fix the initial mistake and forget about the missing correct entry. Always double check if you need to account for both aspects.
Fantastic insights. So after this deep dive, you've essentially got a much clearer roadmap, a systematic way to approach these errors, figure out if Suspense is involved, and make the right corrections. It demystifies a tricky area.
Absolutely. It turns those confusing discrepancies from something daunting into solvable problems. You're definitely better equipped now.
You really are. You've gained a solid understanding of something that trips up a lot of people.
And that leads to a final thought, perhaps something for you to chew on. Beyond just the numbers in bookkeeping, think about how mastering this process, identifying hidden errors, understanding the system, correcting course, how does that skill translate? How does honing this kind of analytical problem-solving approach, whether in finance or anywhere else, build a stronger foundation for critical thinking in whatever field you explore next?